Hey, what's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful with spam and scammers in the comment sections of my videos, guys. I will never ask you to contact me by WhatsApp, and I do not invest money for people. Please be careful for scams in the comment section. Also, if you want 6 free stocks, Webull is going to give you 6 free stocks when you open up a new Webull brokerage account, put at least 1 penny in that account. They're going to give you 6 free stocks valued all the way up to $12,600. So after the video, I want you guys to go down to the description box of the video, click on that Webull link, open up your new Webull account today, go get that free stock, go get that free money. Well, guys, just as the video title says, there could be a sell-off in the stock market today. And the reason there may be a sell-off is due to the CPI numbers coming out at 8:30 a.m. Eastern time today. If those numbers are good news numbers, then we won't see a sell-off. We may even see a slight rally. If those numbers are bad, then we're certainly going to see a sell-off in the stock market. So what is the CPI numbers? Well, CPI stands for Consumer Price Index. And CPI basically measures inflation. You guys know I've been talking about in some of my past videos that inflation is running out of control. The last CPI numbers that came out for April, inflation was around 8.5%. So we're waiting on the May CPI numbers. And like I mentioned, they're going to be out at 8:30 a.m. Eastern time today. So be on the lookout for those. You'll start hearing a lot of chatter about that on the news, especially the financial news, around 9 o'clock or so when the market opens and people start talking about that. What'll happen is the Federal Reserve will comment on the CPI numbers and they will let us know if inflation has peaked, and that would be great news because that means hopefully inflation is ready to flatten itself out, and then hopefully inflation will start dropping. But for right now, we just want to hear good news that inflation has peaked and it's not continuing to rise. If it hasn't peaked and it's still moving north, upward, then yeah, you're going to see a sell-off in the market. And if it's good news and it says, hey, inflation actually has decreased somewhat or has flattened, then there may be the market may be green today, right? It may be green. Hey, Raphael, thank you, man. I appreciate the super chat. Thank you very much, man. That was very nice of you. And I know I caught a lot of you guys off guard by doing it so early, my live, but I thought, why not get this thing out of the way first thing in the morning, make you guys aware of it. So when you're starting to see what's going on in the market later today, you're not caught off guard. Right now, the stock market is volatile because inflation is not under control. And our Federal Reserve is trying to do what they can in order to reduce inflation. That's why you see they have in 2022, they've raised short-term interest rates by 75 basis points already. And if CPI says that inflation is still not coming down and it's still increasing, then you're going to see them aggressively continue to raise short-term interest rates. You'll probably see 50 basis points in June, and then you may even see an additional 50 basis points in July or August, sometime in that area. And again, guys, I'm no expert in this. I'm just giving you my opinion. Certainly go out and do your own research to come up with your conclusion. But for me, I wanted to make sure my audience and my subscribers and potential subscribers, people who support and watch me, I wanted to make sure I, let you know kind of what was going on from my perspective. So be on the lookout for those CPI numbers at 8:30 Eastern time, and hopefully, like I said, man, we'll get some good news. Hopefully, inflation has peaked, and like I said, the May CPI numbers will at least give us some indication of that. Again, if it hasn't peaked, then you're going to see a sell off, in my opinion. If it has peaked, then you may even see a green day, right? You may even see a green day. I know on Thursday, June 9th, which was yesterday, the market sold off at closing bell, man. It sold off, the Dow sold off about 600 points. And the reason it sold off is because of fear, CPI fear, the anticipation that the CPI numbers are not going to be good and favorable as it relates to inflation. And I think that's why it sold off yesterday, right? Because I know yesterday morning, Thursday morning, it actually, things started out quite well, because I was looking at my position in Apple, and Apple pre-market was doing okay. And then, good thing for me, I sold out of my position in Apple in the pre-market before the actual market opened. I sold out of my position, and it was green when I sold out of it. But later on that day, Apple stock dropped. Right. So, and again, I'm not trying to be a day trader or anything like that, guys. I just have some positions in uh, certain tech companies that I kind of play around with, and Apple is one of them. I'm a long-term investor, guys. I'm not a day trader. I don't try to be a day trader. My goal is to find great companies, find great ETFs, and then commit to investing in those great companies and great ETFs long term. See, I don't care what the market does. The S&P 500, uh, if you is a great barometer of the broader stock market. For me, you never can go wrong investing through dollar cost averaging in a good S&P 500 ETF or index fund. You just can't go wrong with that, guys, because you got the top 500 companies in America in it. So for you people out there who are beginners at this and are part of my $5 a day investment challenge that we're doing with that Webull app, if you're part of that, and you're buying companies and you're buying ETFs and crypto every single day, doing fractional share trading on the Webull app, then today is going to be no different. You're going to still go on the Webull app, and you're going to still buy your favorite companies, your favorite ETFs, and your favorite cryptos. But just knowing, if it's a lot of static in the market, just know the static is coming from the CPI numbers, right? If the CPI numbers are good and inflation's coming down, boom, we're going to be okay. We're not going to. I think the market, it may be red, it may be green, but I don't think you'll have a mass sell-off. If the CPI numbers show that inflation is still increasing and it hasn't peaked, then I think you will have a sell-off. But again, guys, that's a great opportunity for us as long-term investors to be able to go in today, perhaps, and buy our favorite companies even at a greater discount. That's the way I look at it, right? I just want a lot of you guys out there who are new at this to know what's happening and what's behind it. Investors are fearful, whether it be institutional investors or retail investors, because we know inflation, increase in inflation, high inflation is not a good thing for the stock market. And I've talked about this in other videos. The stock market is made up of companies, guys, right? That's all the stock market is. It's no magical place. It's just made up of companies, right? And investors like you and I and institutional investors, we just go in and buy shares of those companies. When we believe those companies can make money and make us money, we buy more shares. When we don't believe those companies are going to make any money, we don't buy shares. And that's what you see right now with the stock market. The institutional investors who make up about 75% of investors in the stock market, they don't believe companies right now are making any money. So they're pulling their money out and putting it to safety and waiting, right? So that's what you saw yesterday at the close of trading yesterday. You saw these big institutional investors pulling their money out of companies and putting it to safety because they did not know what would be happening on Friday, which is today, when those CPI numbers come out in about 15 minutes. At the time of this live stream, we're about 8:15 a.m. Eastern time, and those numbers are going to be coming out here real soon. So when they do, just brace yourself. Hey, if it goes red and it's a sell-off around 9:30, 10 o'clock, 10:30, 11 o'clock, that's an opportunity for us now to go in and perhaps pick up us some great companies or a couple of great ETFs at a discount. Again, guys, we got to have a long-term hold pattern though. As I mentioned in yesterday's video, we got to have a 3 to 5 year hold pattern or longer. Do not be putting your money in the stock market if you do not have at least 3 years or longer to keep it in there and not need that money. That's why I'm telling you guys, just invest what you can afford to invest. Don't sit on the sideline saying, hey, I only got $500. I can't really do any investing with that. Well, yeah, you can. If it's $500 that you can put in there for at least 3 years and buy you a great companies and great ETFs through fractional share trading on the Webull app, then do that. I guarantee you, man. Well, here I go again with this guarantee thing. Let me strike that. I do not guarantee anything, but I would be very surprised, guys, if you committed to buying great companies and great ETFs while they're on sale, and then 3 years from now, your net worth isn't better, or 5 years from now, your net worth isn't better. I can't guarantee it will be because obviously it's an investment. There's a risk associated with putting your money in the stock market. But the way I look at it is when I look at history of the stock market, over the last 100 years, there's not been a 10-year block of time, guys, where the market is traded at a negative, right? Not a 10-year block of time, right? So let's not be afraid of the stock market. We don't have to be an expert in the stock market. What we got to be able to do is understand the concept of, I want to take my present day money. I want to be able to buy my favorite companies. I want to buy my favorite ETFs, and I want to hold those companies and ETFs for 3, 5, 10 years. If I'm willing to do that, I think I put myself in a real good position to increase my net worth. And I think you will if you do that. So just be careful of what's going on out there today. There's going to be a lot of fear you're going to see on the financial channels as these CPI numbers come out, especially if it's negative. You're going to see a lot of doom and gloom. Oh my goodness, this is the worst thing, blah, blah, blah. You're going to hear a lot of that, but just cut through all of that. All you should be worried about, in my opinion, of what I'm going to be worried about is which one of my favorite companies, which one of my favorite ETFs, which one of my favorite cryptos can I get at a discount today? If the numbers come out where inflation is not peaked, what can I pick up today and increase my net worth 3 years, 5 years, 10 years from now? Because investing in the stock market, in my opinion, is a long-term game, guys. It's not a short-term dip my toe in and then take my toe out and I done made a whole bunch of money and I'm rich. That's typically not how it works for most of us. Most of us have to commit to putting a certain amount of money in every single week, every single month, and just do that over and over. And over time, our net worth will increase. So that's it, man. That's kind of where we're at. I'm gonna take a couple of questions because I see some people here in the comment section. So let me take a couple of questions, and then I'm going to sign off. Let's see here. Let's see what we got. Do we have any questions? Thank you, Richard, for being the voice we need to hear. Hey, shout out to my lady in Hawaii. Thank you very much. I appreciate that. Let's see. Are you still buying Tesla stocks? Absolutely. Why not? Tesla's on sale, man. I keep telling y'all. Tesla is on sale. And I know some people, well, Tesla's trading at $700 a share. I don't have $700. You don't need $700. If you got $5 and you got the Webull app, which is linked down in the description box, if you go click on my link, open up Webull, put your $5 in there, guess what? You can buy a fractional share of Tesla. Why wouldn't you do that? You don't have to have $700. You know, fortunately for me, I do have it. So I do buy it. Anytime it's below $700 a share, I buy Tesla. That's just the way it is, guys. Tesla's on sale. I'm going to keep buying it. Every time it's below $700 a share, I'm buying Tesla. Because at some point, Tesla is going to be trading at a premium, guys. At some point, Tesla's going to be trading at $1,000 a share. It's going to be trading at $1,400 a share. It's going to be trading at $2,000 a share, right? At some point, at least that's what I believe. So that's where I increase my net worth. When I buy it for under $700 a share and I'm patient and I just hold it, right? I just water it. Not really water it. Tesla's going to do fine without me watering it. But you know what the point I'm trying to get across is, Tesla's going to be a great company, guys. And I'm going along for the ride. See what else we got in here. What do you think of the housing market 3 to 12 months from now? Let me get a little drink of coffee here, guys. Well, the housing market, I can only speak to Florida because that's where I live. I live in Southwest Florida, and I'm telling you what's happening right now in Florida. And Florida's a destination state, guys. People come here to Florida. Why? Because we have tropical weather pretty much 12 months out of the year, especially South Florida. We have tropical weather all year round, beautiful sun, beaches. So people come here. It's a destination state. People buy primary residences here. People buy second homes, third homes here in the state of Florida because this great climate year around that we have. What's happening in the market here, though, is it's starting to shift. It's still a seller's market, but not like it was a year ago. Not like it was 6 months ago where, boom, you throw your house on the market and people are just multiple bidding it. It's going over asking. Not anymore. People are starting to put their house on the market now, and they're starting to have to reduce the price. How do I know that? Because I got a couple of friends that did it, and they had to reduce their price in order to sell the house. So what that's telling me is things are starting to slow down from an appreciation standpoint, right? Also, what's happening is with the Federal Reserve increasing short-term interest rates, that increase in short-term interest rates is also influencing long-term interest rates. Mortgage rates are considered long-term interest rates. They are through the roof. A year ago, you could have gotten a 3% fixed 30-year mortgage rate. Today, it's pushing 6%. So what that does for real estate, especially primary residence, 1 to 4 family real estate, is starting to price the average person out of being able to buy a home, guys. See, everybody doesn't have cash to go pull out of their pocket to pay for a house. Most of us, right? Most of us have to go get a loan. And the only way we're able to get that loan is if we can qualify for a certain monthly mortgage payment. See, last year it was 3%, much easier than now it's 6%. So if I was looking at a $400,000 house last year and I could get locked in at a 3% rate, I would have a certain monthly mortgage payment. That same $400,000 house today, if I got to get locked in at a 6% interest rate, my mortgage payment is going to go up, and that may disqualify me from getting that loan. And that's what's happening, guys. At least here in the state of Florida, may be different where you live, but I can tell you right now, it's not good, especially if inflation continues to run out of control and people start batting down the hatches and not spending their money and staying put. And because they're scared of what's going to be happening with the slowing economy, people might start getting laid off from work. Guys, this thing is nothing to play with. So I think the housing market is in for a surprise. I would say before the end of this year, you're going to see a drastic change in the housing market by the end of 2022. So if you're looking for deals, all I can tell you is get your money together, get your down payment money together, get your financing together if you're going to be financing, and then have verifiable income to show the bank that you can afford and pay for this new loan for this rental property or your primary residence. So just get yourself ready to be able to strike. So if these prices do start coming down and you are able to get some of your properties in the best location you can buy them, you're ready to go. You're ready and prepared. Let's see, anything else we got out here question wise before I wrap up the live stream? I have 10K from 403B, former job. Where do I go from here? Well, that depends, man. If you got 10K and you still want to be able to have that money grow for you so that it can continue growing, so when you need it later on down the road, hopefully it's more than just 10K. Maybe it's 30K, it's 50K. Then I would say, man, if it was me, I would roll it over into a company like Vanguard. Do a rollover IRA. I'd roll it over, and then I would look to invest it in the broader stock market. I would probably take my 10K and look for me a total stock market ETF or a S&P 500 ETF, and I would stick it in there and just let it ride. That's what I would be doing. You may do something different, but that's what I would do. As a matter of fact, that's what I did with my 401k rollovers from my 25 years of banking. I had quite a bit of money in 401ks, and I rolled all of it over to Vanguard and put it in strong ETFs like VGT, information technology. I also put it in VTI, which is the total stock market. I'd also put it in VOOG, which is the S&P 500G. So I rolled all mine over and put it in ETFs, guys, so that it can continue growing over the next 15 to 20 years. That's what I did. You may want to do something differently, but I don't think that's a bad idea. CPI 9.1%. Okay. Again, I can't verify that because I'm on the live here and the CPI numbers won't come out until 8:30. So a couple more minutes, and then at some point we'll know. And again, all I need to know is inflation, has it peaked? Is it, do we believe inflation is starting to come down? That's all I need to hear. If it's yes, then I think we will see. We may see a green market today. I don't know if it's good news. If it's no, I believe we're going to see a red market today. So just food for thought, guys. Whatever you do with that information is on you. But I thought it would be a good idea to share it with you. So that's what I wanted to do before the market even opened today, right? So that way you at least have some idea of what's going on when you start seeing your portfolios either red or in the green, and you're kind of trying to figure out what's causing this. It could be the CPI numbers. What do you think about individual stocks? And that's coming from Created Pamela. What do I think about individual stocks? Well, good question. I'm not a big proponent of picking individual stocks as the basis for building my investment portfolio. I'm not a big proponent of that. Why? Because you got to be the expert. You got to really know what you're doing when you're picking stocks and you're trying to build a investment portfolio, because you got to be able to pick winners and losers. You do. You got to be able to go in and look at financial information on each company. You then got to figure out, okay, Are these companies going to be profitable in the future? Are they going to continue growing in the future? You just got to you got to look at the income statement, the balance sheet. You got to look at a lot of different things in order to try to understand these companies and to be able to pick individual stocks and build a successful portfolio long time. You got to be really good at that. And most of us aren't good at that, right? Most of us, the extent of our research is going to be Google. That's not good enough to be able to pick individual stocks. It can't just be, oh, let me Google Apple and see what Google says about Apple. No, that's not going to get it. So what I tell people to do is don't focus your portfolio around individual stocks. Focus the bulk of your portfolio around ETFs and index funds. Why do I say that? Is because these are already proven, in most cases, proven funds. They have multiple companies in these funds, not one or two companies. They got multiple companies. And you got to understand ETFs and index funds, they track an index or track a sector, right? For instance, the S&P 500 index, right, has the top 500 companies in America in it. So an S&P 500 ETF or index fund tracks the S&P 500 index. See, I'm not picking these 500 companies. They're already there. It's already done for me. The work is already done for me. So I normally tell people 50% of the money you invest, in my opinion, should be going into a broad-based stock market ETF or index fund, like the S&P or the total stock market. And then I would take about 30% of my money that I want to invest, and I would find me a sector ETF or index fund. See, we got 12 or 13 sectors in our country, right? Healthcare, energy, consumer discretionary, tech, right? Real estate. Those are sectors. So I would pick my favorite sector, and for me, my favorite sector is technology. So I take 30% of my money and I go find me a really good technology ETF with the top 30, 40, 50 tech companies in America in that ETF. And that's where I put 30% of my money. And then the last 20% of my money, right, I would then pick some individual stocks. But I would pick individual stocks of companies that I like and that I use and that I believe will be here tomorrow. That's it. I don't get into, oh, golly, what's the PE ratio? I don't get into all that crap because, one, I don't understand it. And why am I trying to understand something that I don't need to understand? All I need to know is, do I believe Walmart is going to be here tomorrow? Yes. Then I buy Walmart. Do I believe CVS Pharmacy will be here tomorrow? Yes. Do I believe CVS Pharmacy is going to continue growing and helping people and making money and being profitable? Yes. Then I buy CVS. Do I believe Tesla is going to be here tomorrow and still be the leader in the EV space? Yes. So I buy Tesla. So 20% of my money is just is around companies that I believe will be here tomorrow, and that I believe if I put my money in them today, my money is going to be worth more in 2 years than it is today. That's my individual stock picking. No analysis, none of that. Because again, guys, we're not going to understand that anyways. See, guys, you can't just pick up a balance sheet and start thinking you're going to understand a company's balance sheet at that level. You're talking about multi-billion dollar companies, man. You're not going to figure out all of that. So forget that part. Just pick companies that you like, you use, and you believe will be here tomorrow. So that's how I would spend my dollar. 50% broad-based stock market ETF, S&P total stock market, 30% in a sector ETF, healthcare, technology, energy, consumer discretionary, real estate, whichever one I like. It's about 12 or 13 of them out there. Pick one you like. And then the last 20%, like I said, individual stocks or / cryptocurrency. So that's how I would spend that's how I spend every dollar, guys. And it served me well. I'm waiting for Amazon to keep falling and then go into the kill. See, there you go, trying to time the market again. Oh, I'm waiting on Amazon to fall. I'm waiting on, why would you be waiting on Amazon to fall, man? Just buy Amazon right now and just dollar cost average in. Guess what? As it falls, you'll dollar cost average in as it falls. But why try to sit here and wait, and then all of a sudden you wake up one morning and there's $200 a share when you could have bought it way back at 118, 125, 135. You think Amazon is going to just see, that's the thing, guys. We got to stop trying to time the market and just get into the market, right? Stop trying to time the market and just get in. Start investing now. Don't wait on Amazon. Just buy Amazon now. Every time there's a red day on Amazon, you should be buying. That's the way I look at it. Do whatever you want to do. I'm not giving you financial advice. I'm just telling you, trying to time the market is not a good thing, man. 8.6 is not good. The USD, okay. CPI data has no effect on futures. Okay, Justin, I'm pretty sure you're an expert at this. So certainly enlighten us. I'm sure you're an expert. I'm sure you're a billionaire. I'm sure you're on CNBC. I'm sure you're on every financial network giving your opinion. Thank you for giving it to us in the chat. We appreciate that. Would you refinance your home at 5.3 to leverage the equity in your home to purchase stocks like S&P, or is that too risky for you? Well, you know something? Here's the deal. I'm a big believer in using all of my financial tools to build my wealth. And guess what, guys? The equity in my house is a financial tool. Now, whether you want to use your house or not is a personal decision. For me, yes, I would use the equity in my house if I believe I could take that equity and increase my net worth. Because, see, I'm not married to a house. A house is just a house. I don't care. I don't really care about a house, right? All I care about is, how do I get to my pot of gold at the end of my rainbow? How do I get there, right? So yes, would I refinance my house if it's under the right situation and I can pull the money out? Now, you also got to keep in mind, if you're going to pull that money out, always remember there is a chance that the equity you pull out of that house, you could put into the stock market and it could go to zero. So be prepared for that too. So never take out money out of an asset that you can afford to lose if you try to put it in another asset to grow it. Okay? You just got to be careful with that. But would I do it? Absolutely. Have I done it? Absolutely. I always keep a line of credit on my home. Always. For that very reason. So I can tap into that equity line, make my investment. And it's just for the stock market. I do it when I'm flipping luxury watches. I do it when I'm flipping stuff online to make money. Hey, man, every financial tool at my disposal, I'm going to use to create net worth for myself and put myself in a position where I control my own financial destiny. I don't want my financial destiny controlled by somebody else. I want to control my financial destiny. I want to be in control of all of my time, 100% of my time. And the only way I control 100% of my time, the only way I control my financial destiny is if what? I have passive income coming in from investments, right? I talk about this all the time in the videos, guys. If you get your active income, that's who controls you. Whoever is paying you, I don't care if it's your employer, your business. If you got to trade time for money, that's not financial freedom. That may be a good lifestyle, but it's not financial freedom. Financial freedom is I can kick back and do nothing, and I still have enough money coming in from my investments to take care of my financial needs. That's financial freedom. Let's see what we got here. Anything else? Income that stopped flowing soon during recession. Okay, I'm not sure what that means. Making money while I'm asleep. Okay, Roddy Piper. Being an old retired person, should I get rid of my house and get a newer one? Hold on, let me see if I can scroll this thing back down. Can I scroll this down? Oh, yeah. What is it saying here? Being an old retired person, should I get rid of my house and get a newer one and not worry about what happens to it when I die? Wow, Fred. That's up to you. That's up to you. Again, I'm not married to a house. So I mean, I don't look at a house as, oh God, this is my, this is my forever. This is my dream. I don't look at houses like that. I look at a house as a place to live, and that's it. I mean, so for me, the question becomes: at your age, do you want the security of knowing I own my home free and clear, no mortgage on it? And if something were to happen to me, and I get in my old age, I always know I got somewhere that's mine, that I can peacefully exit or transition to the next phase, and be comfortable with that. So you got to make that decision, right? For me, I don't really care about a house. If I'm gonna live in it, I want it to be nice. I want it to be clean. I want it to be safe. But the rest of that stuff, I don't care about it. All I care about is, can I make money if I need to? Do I got enough equity so if I want to sell this thing, I can pull me, I made a profit on it. That's really all I care about. You have to figure out what's important to you when it comes to your home. That's an individual thing, man. But, certainly buying a newer house, getting rid of the old one and buying a newer one, if that makes you happy at this stage of your life, then consider it. All right, let me move on here to some more questions. Okay? When will you do a workshop in Atlanta, Georgia? Gloria, I will do a workshop in Atlanta, Georgia, as soon as I have enough people that request that I do one. I've been thinking about doing some traveling and going to certain markets where I have a good sized audience of people. Like I almost got 500,000 people on the YouTube channel. So there are certain markets out there where, I may start putting some feelers out. And again, it doesn't have to be a lot of people. I mean, it can be 15, 20, 30 people. We get a nice little conference room at a nice hotel. And yeah, I don't have a problem with that. So that's certainly something I've been thinking about, and we may do something like that in the near future. It just depends on if there's enough demand for it, I guess. If enough people want it to happen, then we'll make it happen. I don't mind traveling. I enjoy meeting people. I enjoy chopping it up with people. I enjoy talking about financial freedom. And I just give you my opinion. It's certainly only one opinion. There's many of them out there, but I'd love to do that and just get to meet some of the subscribers and spend some time with them. So yeah, we'll think about that. But I want you to DM me, Gloria, on Instagram. DM me on Instagram, and you and I can talk about that. And let's see if we can put a group of people together in Atlanta, and we'll make it happen. 100% agree. Pay off a place to live as soon as possible. I will reduce risk substantially. Don't be enticed by homes you can afford. Don't be house poor. Hey, man, I'm with you on that. JR_old. I agree with you 100%, man. You don't want to be house rich and cash poor. Uh, don't get in over your head. Just find something that you're comfortable with, that you can enjoy your life with, and move on from there. What do you think? Where would you park 10K emergency fund? Savings, liquid cash, inside a Roth? Well, if it's my emergency fund, I'm gonna put it at the bank because it's FDIC insured. That's where I'm gonna put it at. I'm just gonna leave it at the bank because it's a short-term need. It's there for short term. So if I get a bump in the road, boom, I can just go grab that money. Oh, I appreciate it, Lee E, for the super chat. Let's see. Been watching you since you were at around 40K. Congratulations. Really keep dropping these gems. Hey, Lee, I appreciate you, man. You're OG. If you've been around that long, I appreciate your support. And I also appreciate the super chat. Thank you. Let's see. Keep up the great work. Awesome. Let's see what else we got here, guys. I think I'm going to try to go an hour. I guess I'm going to go about 20 more minutes. So if you guys got questions, go ahead and ask them now. I'll try to do my best to get to them. Certainly the super chats will get priority. So if you really got a question you want me to answer, throw out a super chat and we'll certainly get you at the top of the list. Let's see here. Relaxed meditation, music. Richard, are VUG and VOOG the same? Is one better than the other? No, they're not the same. I think they're similar. They're similar, but I think your VOOG is going to be your true top 500, not really 500. So you got VOO, and VOO is going to have what? The top 500 companies in it. Now, part of those 500 companies are going to be growth companies, and then part will be value companies. So what VOOG does, it just takes those growth companies out of VOO and just isolates them in its own fund. And that's what VOOG is. It's just growth companies, right? And then VOOV does the same thing for value companies. It just isolates the value companies in its own fund. So VUG, I can't really remember right off the top of my head if that's large cap, mid cap, or if that's small cap. I don't know. You have to look at that. But I like VOOG. VUG is good as well. Don't get me wrong. It's great as well. And yeah, VUG may be a little bit cheaper from a per share price standpoint than VOOG. But it just depends on what you like, man. Both of them, in my opinion, are gonna do well. But what I would probably do is I'd look at the historical performance of the two. So I'd go look at the 5-year, the 10-year, the 15-year performance over time. And you can look at both of those things on Vanguard's website and then get an idea of which one has performed better over time, over like the last 10 years or 15 years. And then that might help you make a decision on. How do you know if you should rent or sell? Ashley P. Well, again, that's up to you. See, all of us guys should have a financial plan, and we should have financial goals, and we should have a roadmap to get us to financial freedom. If you believe renting a place and being able to take the money that you would be spending by owning, and you can rent something for cheaper and then take the difference between what it would cost you to own and what it costs you to rent, you take the difference and you want to invest that to grow it, then nothing's wrong with that. People do that all the time. Home ownership is not for everybody, right? So if you believe, hey, I bought this house in 2019 for $300,000, and I know right now I can sell that house in 2022 for $600,000 and make me a nice, cool $300,000 profit, then I'm going to just go ahead and rent for 3 or 4 years, but take my $300,000 and invest it. Guys, I can't argue with that. I mean, especially if it's somebody that has no money and you can grab $300K, dude. I mean, I can't argue with that. Me personally, I'd probably take the money. I'd probably sell the house and get them out of there, honestly. But see, I'm in a different situation because I've already built wealth and I already got money. So I don't necessarily have to just sell my house because there's some equity in it. I don't have to do that. But everybody ain't in the position I'm in. So if you can, look, I'm telling you, man, this thing ain't gonna be like this forever in real estate. It's gonna come down. So if you're in a position to do that, do it, and take the money though and put it somewhere where it can continue to multiply itself. Chester Williams, are single family house rentals better on a risk-adjusted return average than individually weighted stocks? See, there we go, Chester. There we go again with these technical questions that nobody on here ain't gonna understand. Now, you may understand them, but ain't nobody else gonna understand that. Listen, here's the deal for me. This is the way I look at it. If I'm gonna get a rental property, I'm gonna look at what can I get on a cash-on-cash return. So if I buy a house for $400,000 and I got to put 20% down, which is 80 grand. So when I put my 80 grand into this $400,000 property, what type of return am I going to get on this 80 grand? I should have a number in my mind that I need to get. Let's say I want a 12% return on my 80 grand, which is a 12% cash on cash return. The question is, can I take that 80 grand and put it in the stock market today and get a 12% return? No, you cannot. You cannot put 80 grand in the stock market under the conditions we're in today and expect you get a 12% annualized rate of return in 2022. Most of us won't get that. Why? Because the stock market is too volatile. All the companies are at a discount. Unless you are very, 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 very good at picking stocks, you're not going to get a 12% annualized return in 2012 on the market. So for me, if I can get the 12% in real estate with the 80 grand, I go the real estate route, because I don't believe you'll get it in the stock market. Not this year. Now, could you get a 12% return over the next 3 to 5 years in the stock market? Yes. But can you do it in 2022? No. So which one would I take? I would probably go with the rental property, because I believe you can get a 12% return if you buy the right single family home in the right location and you're getting rent for it. There's a potential you can get a cash on cash return of 12%. So I hope that answered your question. Let's see here. What else we got? I know I missed some guys. Again, guys, if you want me to get to your question faster, super chat is the way to do it. We understand. Let's see. I come to asset manager. I came from asset management. That's good. It looks like you know it then. You know what you're talking about. 8.6 CPI is not good for the stocks, right? That's right. It's not good. No, it ain't good. Listen, man, you got to understand inflation. Inflation where we really want it at is around 2 to 2.5%. That's where we really want inflation, guys. And right now it's 8.5%. So you do the math. That's not good. So we need inflation to come down a lot before the stock market gets itself back on an upward trajectory and we start seeing really good returns again in the stock market. That's not going to happen for a while. So you guys got to understand, when we decided, well, not we, but our government decided in 2020, when the pandemic broke out, when the government decided to give away free money through stimulus checks. And I'm not saying I disagree with that. I think it was the right move because people were shut in at home, couldn't work, and a lot of people needed that money in order to get through that tough time. So our government did what it had to do in order so our full economy wouldn't shut down, guys. Right? That's why they had to give out that free money. But there's a price to pay for that. And now we're paying the price with high inflation. See, when you pump too much money into our free money, excess money into our financial system, at some point you gotta pay for that. And right now we're paying for it. And we're just gonna have to ride it out. Right? We're gonna ride it out. We did what we had to do. Now the consequences are here, which is inflation, high inflation. We just gotta ride it out. But we'll ride it out. Everything will be okay. This ain't the first time we've been through this. We've been through this before. We'll be okay. People act like we ain't never went through this before. Yeah, we have. Many times. So we'll be okay. What you should be doing is taking advantage of these companies being on sale. Buying your favorite companies, buying your favorite ETFs every single day, every single week, every single month. And then in 3, 5, 10 years, you'll be better off for it. That's my opinion. Today, Dow minus 1,000. Yep, I can believe it's minus 1,000. It's probably because, again, I'm not sure what's happening. If anybody has any news on what's going with the CPI numbers, why don't you put them in the chat? Because I don't want to take time out I'm not a real sophisticated person when it comes to technology on these computers. So I don't want to try to look up something and then shut the whole chat down because I'm not real good at this. So somebody please go out and figure out what's happening with the CPI numbers and drop it in the chat if you don't mind. Oh, somebody said 8.6. Oh, that's not good. That's not good. So yes, guess what? You're going to see a lot of red today, guys. You're going to see a lot of red today. So be prepared. It may be a good day to buy. I'm telling you, it may be a good day to buy, man. And guess what? I believe the Fed will probably be boosting short-term rates by 50 basis points this month. They'll probably do it again next month. So be prepared for that as well. Yeah, things are going to get a little bit worse. But again, don't panic, because guess what? This is where you build your wealth, guys, in times like this. If you can be consistent, be patient, you can build your wealth. Trust me. Don't be discouraged. Take it as, flip the script, make it an opportunity where you can start building wealth. Because I'm telling you, right now is a pivotal moment in your life. If you got no net worth, if you got very little net worth, but you got income, if you got income and you can change your habits with that income, if you're spending that income to make somebody else rich, stop it. Redirect those dollars to make yourself rich, make yourself wealthy. And you can do that right now through the stock market if you got a long-term hold pattern. Do not put money in the stock market that's for short-term use. Don't do that. But take long-term use money and start putting this thing in the stock market. And again, I got to keep reminding you down in the comment section, down into the description box, there's that Webull link, and me and my subscribers are doing that $5 a day investment challenge, guys. We're doing it every single day where we're taking at least $5 and we're buying a company, or we're buying an ETF, or we're buying a crypto, and we're locking it into our Webull portfolio, and we're going to see how we can grow this thing over the next 6 to 8 months. So if you want to be a part of that, click on that Webull link down in the description box, get your 6 free stocks, and then be a part of that $5 a day investment challenge. And again, guys, if you want a tutorial video on how to do fractional share trading through the Webull app, DM me on Instagram, give me a screenshot of your new Webull account, and then I will send you a tutorial video I did. It's very simple, very easy. It will walk you through it, and you can watch it over and over and over until you get comfortable at doing fractional share trading. Well, all right, we got a super chat, so let me get back to that. I don't want to miss that. That's from Jay. For a beginner, which would be the top most reliable stock right now to invest in, your opinion? Okay, again, Jay, I'm not a big proponent of picking individual stocks. So what I would tell you is to buy a S&P 500 ETF, which gives you the top 500 companies in America in your fund. So you don't have to go out and pick individual stocks. You're going to already have the top 500 companies in America in it. And one that you can do through the Webull app is Vanguard Vanguard S&P 500 ETF VOO. So that's the one I would recommend is get a broader based stock market ETF so that you have 500 companies and you don't have to worry about 1 or 2 reliable stocks. You're going to have 500 reliable stocks in your fund, in that Vanguard S&P 500 ETF, VOO. That's the ticker symbol, VOO. If you want to read more up on that particular ETF, you can go to Vanguard.com. You can go to the search bar and you can put in the ticker symbol, which is VOO, hit search, and then it'll bring that up for you and you can read up on it. You can look at what companies are in there. You can look at the performance, right? You can look at how long that fund has been around. So that's what I would encourage you to do, is start with that. I wouldn't worry about individual stocks. I would just do that Vanguard S&P 500 ETF. After you get that going, then you may want to think about some really, really good companies like Amazon right now is split 20-1 earlier this week. So they're on sale. That's a good company to be investing in right now at a reasonable per share price. I also like Apple. I also like Microsoft. See, I like the tech companies. I like these companies that are online and using the internet and are internet based. I like those types of companies. But I also like value companies like Bank of America, Wells Fargo, JP Morgan Chase. I love financial uh, institutions, because why, they are part of our overall economy, and they're very crucial to our overall economy. And I like those types of companies because I think banks, if they're ran properly and headed up by good, strong senior management, they will always be profitable. So I like some of those as individual companies, but I recommend VOO for you if you're looking at getting into the stock market, but you're not real sure about what companies to pick. Go with VOO. You're gonna get the top 500 companies in America in your portfolio. All right, let's see what we got here, guys. Let's keep moving on here. Um, Blank space. AT&T is battle tested. It survived the 1920. I like AT&T. They pay a strong dividend. I like it. Hey, look, listen. AT&T is a behemoth. It's been around forever, right? And it pays a good strong dividend. It doesn't grow as much. It is not going to be a growth company. It's a value company. But guess what? Woo! Good dividend. Love it. Love it. Love it. Let's see here. We got yeah, TC Talks. Apple. Yeah, I like Apple. Like I said, I traded some Apple yesterday. Let's see, Amazon, a good investment long term. I think so. I mean, I don't have a crystal ball, but it's Amazon, man. I mean, who out there can rival Amazon right now? I don't know what Amazon will be in 10 years, but if they, I mean, I don't know, man. Amazon is strong. I mean, I don't know nobody in the online retail space. Now, again, I know Amazon is more than online retail, so I know that. I know they're much more than that. But that's really where they cut their teeth. I don't know anybody out there better. So I think Amazon is a safe pick, good pick. And I think right now where it's trading at per share price is good for. And again, you don't even have to have the $118 or whatever it's trading at right now. You can buy Amazon with little as $5, man, through that Webull app. Like I've been telling you guys, fractional share trading. If you got $25, you can buy a fractional share of Amazon. So don't make it harder than it is. Don't make any excuses to stay on the sideline. There is no reason why we shouldn't be building wealth right now, guys. This is the greatest wealth transfer most of us will see in our lifetime if we do it right. And we can use the stock market to help us get there if we're not afraid, if we can put a plan together, if we can be patient, if we can be disciplined, and if we can be consistent. Let's see what else we got here. How do you plan to allocate? Hold on. Let me go scroll down. Boy, these things moving fast. How do you plan to allocate your portfolio in your golden years? Sell stocks to buy bonds, sell it all for cash. What's your end goal? Love your channel, bro. That's from Dennis. Hey, Dennis, that's a great question. So for me, I'm in my early 50s, guys. So for me, when I get to the golden years, and I think golden years, Lord willing, I can stay healthy. I think golden years for me are probably, 70 plus, right? So early 50s, 15 years or so before I get to, 15, 16 years before I get to 70. So the goal though for me is by the time I get to 65, instead of being 100% equities like I am now, so I'm 100% equities, but of my net worth, I have about 70% of my net worth in the stock market, right? And I know some of y'all are like, oh my God, you're going to take up. No, guys, you got to understand, guys. I've been doing this for over 20 some years. So my cost base is, I'm good. Trust me. Even with the downturn in the market, I've been doing it so long and so consistent, I'm good. So my goal is to leave that alone 100% in equities until I get about 65 years old. Once I get to 65, the goal is to start transitioning from 100% equities to probably around, by the time I'm 70, I probably want to have 50% equities, probably 50% bonds. Because at 70 years old, I need to be able to protect some of the principal, right? I need to be able to protect some of my money so that I can derive an income off of it in my golden years. But I also want to keep some of my money in equities because I want it to continue to grow, right? I don't want all of it in equities, but I want, probably 50% of it in equities so it can continue to grow and be there for me when I get to be 90, hopefully, right? So I don't want 100% in equities because I'm gonna be too old to be going through too many roller coasters. So in the stock market, so I want 50% equities, 50% bonds. Actually, let me change that. I'll probably do 25% equities, 50% bonds, 25% cash. That's probably where I'll be at 70 years old. Hopefully that answered your question. But right now, 100% equities. I thought I had a super chat in here. Did I miss it? No, that was Jay. Okay, I think Jay was the last super chat. Just making sure I didn't have a super chat. Oh, I did have one. Here it is. Here it is. Let me get this super chat, guys. How much money do you need to invest in real estate? And that comes from Corinda Shockley. Well, good question. It depends. So if you're a first-time home buyer, if you can be a first-time home buyer and you want to buy a 1 to 4 family dwelling, let's say you want to buy a 3-unit small apartment building and you're willing to live in 1 unit, which considers that thing your primary residence, you can do that with 3.5% down. Right? You can buy that 3-unit. You can buy all the way up to a 4. You can buy 1 unit up to a 4-unit through first-time home buyers with only 3.5% down. And then you'll get financing for the other 96.5% from some lender, right? And the reason they're able to do that is because FHA, basically the government, is basically backstopping their loan. They're basically saying, hey, if this person defaults on their loan, we got you covered. So go ahead and give them more loan because they're first time. Give them more loan, and we'll cover you if they default. So that's what FHA is. So you can actually go in with 3.5% down. So it just depends on what you can afford, right? So then the lender is going to look at your income. They're going to look at your existing debts, and they're going to do what they call a debt to income ratio. And that debt to income ratio is going to tell them what they believe you can qualify for on a monthly basis for a mortgage, right? And then that will equate to a dollar amount. Let's just say they say you can qualify for a $300,000 loan. Then you take the 3.5% from the 300,000, which is roughly 10 grand. $10,000 would be your down payment plus the closing costs, and then the lender would finance 290,000. Right? And then boom, there you go. So it just depends on your income. It depends on your other debts that you have, because normally most lenders, especially for FHA, they want to see your debt to income ratio below 50%. So for every dollar you got coming in income, they don't want to see more than 50% of that dollar or 50 cents of that dollar servicing debt, including the new mortgage. So you got to be, you got to work those numbers out. But the good news is any lender can help qualify you. And that's what I encourage people to do. Number one, you got to have income. You got to have verifiable income. You can't be, I don't have a job, but I want to buy a house. No, it don't work that way. You got to have verifiable income, probably for the last 2 years. And they're going to want to see your tax returns to show that. So they'll want to see 2 years tax returns plus your W-2, 1099, whatever, year to date. So they take that information and then they go pull your credit. Then they're going to look at those things on your credit report. One, you got to have a high enough credit score. I believe with FHA, it's 580 or higher. And any derogatories, you're going to have to clean that stuff up, right? That's part of it. You got to clean up any derogatories. And then they're going to look at your debts and see against your income. And that's where that debt income ratio comes in. So, yeah, I mean, it all depends. I think for people who have never bought a home and they can qualify for first-time home buyers, even though they want to be an investor, it's a good opportunity to use that 3.5% down payment to get into your first real estate property. And then from there, you can move from there. That's what I did when I first started out in real estate. I used first-time home buyers, 3.5% down, got into a little single-family house, lived in that house for 2 years, and then pulled all the equity out of it, bought a second house, and just kept doing that. Not first-time home buyers. I only could do that one time, but I just kept leveling up. Each time I bought a house, I would just take the equity out of the previous house to buy a new house, and then just kind of built my portfolio like that. So what else we got, guys? Oh, shoot, it's already an hour in. So a couple more minutes, and then we're going to get out of here, guys. Let's see what we got here. When you are coming out with your course, Tiffany Drake, when are you coming out with your course? I know, guys, I've been lazy on these courses, and it takes a lot of work, man, to put these courses together. And I just haven't had the energy to, or the time to just sit down and film and edit and do all of this stuff to put courses together. Hopefully before the end of this year, I will be in a position to be able to do that. Maybe I need to get somebody to help me. So if you guys know anybody out there that can assist me in putting these courses together, certainly have them DM me on Instagram. And certainly they need to be legit. Let's first of all, guys know I'm not going to fall for anything stupid. So please don't be contacting me if you some scammer trying to, no. Be legit, because I'm going to do my research. I'm going to vet you. So if you're legit, though, and you want to help me put together some financial courses to help people, then yeah, DM me, because I love the partnership. I just don't want to, I'm dreading doing it on my own. So if you guys know anybody that specializes in that, have them contact me on Instagram. Let's see what we got here. First time home buyers, do you recommend pros and cons? Rich, I am a video producer and 10 years plus experience. I'd love to give you, hey, JJ, Laura, DM me on Instagram, man. We'll chat it up. If you got cash, minus, we'll just knock on your doors and cut the bank out. Okay, I don't know what that is. Can you explain what the Amazon stock split means? It just means whatever the stock was trading at on the day it split, it split it up in 20 pieces, right? So if it was trading at, I don't know, I think it was trading in the 2,000, 2,200, something like that. But it split it, one share split 20 times. So that's what that means. It means if it was $2,200 a share, that one share for $2,200 split 20 times. And then that 20-to-1 split was the new stock price. So that's, and again, if you're not comfortable with that, go out on Google. They'll give you a better explanation than I just gave you, but that's my interpretation of it. Let's see here. Who else? Any more super chats before we get out of here, guys? If not, I'm gonna try to answer a few more questions, and then I'm gonna end the chat. Darius, let's see. Do anybody do everything by yourself, my brother? People are evil, jealous. Don't let people in your circle, please. Nowadays are evil. Hey, Darius, I'm with you on that, man. I know it's a lot of old fake scammers out there, but I am looking for some partnerships, though, man, because I want to really grow this thing. And one thing I've learned in business, my 25 years in banking, sometimes you do have to bring on certain partners in certain parts of your business in order for it to grow effectively. See, the thing is I know what my strengths are, but I also know what my weaknesses are. And that is one of my weaknesses. Sitting down, trying to put a template together and then film all this stuff and categorize it and make it make sense video-wise and editing-wise, that is not my strength. My strength is talking to people about what I've done to build my wealth and hopefully giving them hope and motivating them that they can do the same thing. That's really my strength. So I need to I need to concentrate on, maximizing my strengths, but I also need to bring people in that can help me with my weaknesses. And I'm okay doing that. And again, I'm not going to do it with anybody that I don't vet and I don't believe 100% has people first and money second. That's the thing for me. It has to be people first. I don't care about making a buck, but let me correct that. I do want to make money, but I'm not going to put it above people. I'm never going to put money above people. And you guys mean the world to me. And there ain't enough money in the world where I would want to deceive you or trick you, because I've had people contact me about, well, we'll handle the whole back end and all the money and all of this stuff. And all we want you to do is we're going to send you these videos and we just want you to just tell people this. No, that's not how it's going to work with me. I control 100% of anything that I do, right? I'm going to control 100%, have final say on everything. I'm never going to have somebody send me something and I'm just going to read what they tell me to read. That's not how it's going to work. Let's see here. How do you feel about the Twitter and Mustang going on? I don't know, man. Elon is Elon. That's right up his alley. If anybody can make it work, it's Elon Musk. But I really don't know, man, and really don't care, honestly. Let's see here. Just make sure you hire someone with experience. Absolutely. Absolutely. I definitely will hire somebody with experience. It won't be anybody that I don't believe has a proven track record of success in the area that I want them to help me in. Well, all right, guys, I'm going to end it there. Thank you for spending an hour with me in the chat. We got one more super chat here. We got Anita F. I appreciate the super chat. Thank you so much. I appreciate that. But thank you guys for stopping by for a little bit. Hopefully, you got a little bit better understanding, at least from my perspective, of what's kind of going on with the CPI numbers and how that's going to affect the stock market today. Looks like the CPI numbers were not good. Looks like the market is probably going to be in the red today. Not sure how bad the sell-off will be. I think there was some sell-off yesterday, so it may not be as bad today because people kind of anticipated bad news and they started selling off yesterday. So hopefully it won't be too bad today. But again, it's an opportunity for us to build wealth if we're not afraid to buy some of these companies and some of these ETFs as they're on sale today because of the not so good news with the CPI numbers. So I think Anita F did have a question. How much do you need to invest in to see a good dividend? Well, Anita, why don't you send me a DM on Instagram and you and I can chat about that, because I'm getting ready to close out this session and that's going to take a while to go through with you. So just DM me on Instagram, Richard Fain 28. Well, all right, guys. Again, click on that Webull link down in the description box of the video if you want to get those 6 free stocks from Webull and join my $5 a day investment challenge that I'm doing with my subscribers, where we're taking $5 a day and buying fractional shares of our favorite companies, favorite ETFs, favorite cryptos, and building our wealth. So thank you very much, guys. I appreciate you. Oh, man, I got one more super chat, then I'm going to close it out. Hello, Richard. I don't have an Instagram account, but I can assist you. Well, email me. Go down to the description box. 5G coronavirus. Go down to the description box, and there's an email address in there for RF Financial Consulting. You can go and take that email address and email me, and then we'll chop it up. All right. Well, all right, guys. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.